Hi everyone, let's read the tape for today. Yesterday the index did something the headlines completely missed, and it's the only thing that matters for your plan today. The Nasdaq and QQQ both sold down to the long-term trend line, both poked just under it, both closed back above it. If you only watched the red candle, you saw fear. If you read the tape, you saw a test that really held. Let me give you the levels, because that's all that matters in a tape like this. Support first. The floor is the long-term line. On QQQ, that's $672. On the Nasdaq, that's $24,721. Yesterday, QQQ traded down to $668, about $4 under the line, and closed $675. Nasdaq dipped to $24,581, roughly $140 under the line, and closed $24,877, about $156 back above. Both undercut, both reclaimed. That's a spring, not a breakdown. Behind that floor, the lower rail sits at 641 QQQ and 24,080 on the Nasdaq. That's your second line of defense if the first one gives. Now resistance, and this is where the real trade sets up. The short-term line is still overhead. QQQ's is at $701, Nasdaq's is at 25,559, price is below both. So right now this is a bounce of support, not a reversal. The midterm line is even higher, 708 on QQQ, 25,789 on the Nasdaq. That's the next ceiling after the short-term trend line. Here's the volume tell, because volume tells you whether a movie is real. Yesterday's flush came on size. QQQ traded 51.3 million shares versus 42.7 the day before. Nasdaq printed 7.6 billion against 6.8. Weak hands got cleared at the line on heavy volume, and the index still reclaimed the close. That's a shakeout. When distribution happens, you don't reclaim the line. You break it and you keep going. We didn't. One more read before I go. Don't confuse this with the semiconductor story from last week. We broad index held its long-term line. The chip sector broke its short-term one. Different lines, different messages. The index tells you the market has a floor. The sector tells you the hot money is still exhaling. Both can be true at once. That's why I read the index and the sector as two different trades, not one panic. So what confirms the bounce becomes a rally? One level, a daily close back above the short-term line, 701 on QQQ, 25,559 on the Nasdaq. That's your green light that the repair trade is live. What ends it? A daily close back below the long-term, 672 on QQQ, to 4.721 on the Nasdaq. If that goes, the lower rail at 641 and 24,080 is the next sub. The bounce thesis is dead. My plan is simple, and it's the part most people get wrong. I'm not buying the undercut reclaim. That's chasing a shakeout, and shakeouts fake you out all the time. I'm waiting for one of two things. A clean close above the short-term line, which tells me the buyers mean it, or a loss of the long-term line, which tells me the floor cracked. Until one of those prints, I do nothing. Cash is a position. Patience is the edge. Here's why I'm comfortable sitting on my hands. An undercut and reclaim is a signal, not a promise. Plenty of springs roll right back over and become the real breakdown. The only thing that separates the two is what the next session does at the line. So I'm not betting on the bounce. I'm waiting for the tape to show me which way the floor breaks. Survive the shakeout first. Trade the confirmation second. The trap here is binary thinking. Bottom or breakdown, the tape isn't binary, it's a line being tested and the test held. That's data, not a verdict. Read the next session, don't call it. If we reclaim $701 and 25,559, I get interested. If we lose 672 and 24,721, I get defense. Everything in between is just noise I'm paid to ignore. That's my read of today's tape. Stay patient, and I will see you tomorrow. If this level by level breakdown helped your read, subscribe. And next session I will show you exactly which names lead if the short-term line reclaims. Trade safe, stay safe. Hope I see you on the next tape.